It's the big theme on Varney Company today. The Muni Bond Market could be set for a big crisis. We're spiraling down, seems like it. Struggling states, struggling with debt. Remember, you get a tax break on municipal bond interest, so wealthy people like to buy them. If you're a counselor to the wealthy, what do you say to them? Well, Ed Butowsky of Chapwood Investments is indeed a counselor to the wealthy. He joins us live from Dallas. You have wealthy clients. I'm sure that some of them hold in municipal bonds. What are you telling them to do?
Stuart, this obviously is a terrible situation, and what we're going to see some bonds, basically default. But what you're going to start to see, as what you have pointed out accurately, is you're going to start seeing the market sell off. And the reason that this is so important at this point for clients is that they need to go in and tell their advisors to do a yield to maturity check from this point forward, because interest rates were much higher when they bought those bonds. Interest rates dropped, therefore the value of their bonds went up. So they have some pretty good unrealized capital gains at this point. They need to really look closely and start selling those, because interest rates are going to rise and we're going to see defaults happen, and as a result of that you're going to see this muni bond market start to sell a bit and maybe sell off quite a bit, and as a result of that they're going to lose that capital gain. So I'm advising my clients to really look closely at selling those bonds right now.
Okay, but if you don't sell, if you just sit on those bonds, you don't sell, so you don't take a loss, you don't take a capital loss at all, you continue to milk the interest tax-free, I guess that's what most people are going to do, isn't it?
Well, some are going to do that, but they have to open up their eyes and realize that you have to look at the yield to maturity. Some people like to get that interest, but they don't realize that a bond might be priced right now at 105, and a year from now it could be priced at 102. And that is the result of the fear and the selling of these bonds. Because when people sell in one part of the country, it could be California, don't think that that doesn't affect people in New York or in Chicago or in Texas or Florida. It's really, they're very tied together. Even though they're different municipalities, there is still that contagion that takes place. People will sell out of muni bonds if you start seeing defaults, and that will raise rates, and people will lose money from where they are today.
Okay, I've characterized this as a downward spiral. I'm being pretty strong on this. Do you agree with that analysis?
I don't know. I believe that we're going to see downward momentum. I don't know, quite frankly, what the difference between momentum and spiral is, but Stuart, I agree with you. We are going to start seeing selling of municipal bonds, but it's not just because of the fear of default, it's also because of the fear of inflation that is coming right around the corner.
One last one. I don't think that a state will be allowed to default on its debt en masse. I think there'll be some kind of rescue package from somewhere, which means why don't you buy those bonds now, because they're not going to default and you can milk a very nice interest rate.
I would not do that. What I would be doing is waiting till those prices drop, then you go in and buy them. We are just at the very beginning of this downward move. You're going to see the value of those bonds drop and the yields go higher. So I agree with your thinking, but wait about 6 months.
Whoa. Ed Butowsky, strong stuff indeed. Thanks for joining us. Appreciate it.